All right, welcome everyone. Welcome to our Thursday evening call, 7 p.m. Eastern Time. This is our real estate accredited call. Tonight we do something a little bit different. We're going to talk about our fund, and we are going also to talk about our latest addition to our team. Chris is on the call with us. But without further ado, we'll go over a presentation of the Boost Wealth Fund, a customizable real estate fund, and talk about basically what we're doing as a company and what we're looking for and our goals, target markets, etc. So everything is broken down. Hopefully, it will be useful. And yeah, let's just start. All right. So, okay. So as a high level, big picture view, as a company, Boost Capital Group, we are helping busy leaders and professionals to preserve and boost their capital through passive real estate investments. And for that, investing with us, they have the ability to build a customizable portfolio of investments through the Boost Wealth Fund. So the minimum investment is $50,000, but as a fund, we look to raise a total of $15 million. And our target is exclusively the commercial real estate market. And our goal is to achieve 15% internal rate of return or more, as well as a cash on cash average return of 8%. So we are focused on core plus and value add commercial real estate assets, meaning that we are staying away from brand new assets and very heavy lift as well. So in between, but always a value add component to what we're doing. Or core plus means it's relatively new, but there is some value add component. We are also targeting experienced sponsors, and we'll go in depth about that topic in a second, as well as stabilized market with upward growth potential and also properties that are above 100 units. So again, our mission is to provide long-term value to our investors. Coming back to the customizable fund part, our vision with the fund is we don't like closed-ended funds, meaning that usually an investor will invest in a fund and then the managers invest on their behalf to many assets. And all these many assets, they provide the returns that are divided pro rata to the investors. Because in this model, the investor doesn't have the ability to pick and choose their individual investments. So that's why we decided to go ahead with a customizable fund. And with the customizable fund, I think you have the advantage or advantages of a fund, and we'll talk about that in a minute, but also the advantages of being able to select your individual investments.
For that.
Strategy, you
Yeah,
want to go ahead? You want to take care of that?
sure. Yeah, pretty much Philip pretty much laid out what the our customizable fund is and who our investors are. So our strategy here is pretty much, like he said, focus on real estate investment opportunities within strong markets with strong job growth and the ability to have better returns. Our investment criteria is broken down right there with a 5-year minimum term is the focus. Sometimes we may go a 3-year term, but 5 is the focus for this for the deals within the fund. He touched on the internal rate of return, the type of assets that we go after. And in Class A and Class B areas, we stay at a C and D areas, as well as the property type of Class A and B. And we could go into more detail about those specifics. We also have a blog that kind of identifies these property class types. In regards to the cash on cash, our benchmark of 8% going year 2 forward. So usually for most of these value add deals, there is little to minimum cash on cash because of all the work that's being done to increase value of the properties, turnover rates, as well as lowering expenses during the first year or two. So we expect to have a target of 8% cash on year two. These properties, because of the size, 100 units or above, we focus on having on-site management and maintenance as well as we work with the property management companies to have excellent synergy in order to make these properties operate at excellent levels. The markets need to be stabilized or growing towards upward potential. So we focus on the market is a huge, we do a lot of analysis on the market before we invest in those markets. So there's a lot of detail and data that goes into this assessment. So these deals, these properties are going to be in good markets or markets with in the path of growth. And as far as leverage goes, we focus on leverage at 75% or less in order to help protect capital, especially with the changes of interest rates. The lower its leverage, the better returns are, as well as the ability to be able to pay the debt service ratio. So we take all those into account. All right, so opportunities in this fund, actually in commercial real estate. So just like basic real estate, there's always an upside for real estate. There's a lot of wealth that's being created in real estate, and there's a lot of benefits. So here's a list of benefits of why it is a real value to invest in commercial real estates. We focus in top markets, like I said earlier. So in regards to recession resistance, there's a lot of talk about recessions coming. Properties that are producing are resistant to recession because they are generally priced to demand. So the value of the property is associated with the net operating income of that asset. So that's always a key thing when it comes to the economy. Economies of scale, if you have 1, 2, 5, 10 units that are vacant, you still have the other 90% of the units paying that rent, the mortgage. Also, when we have property management companies managing multiple properties in one area, the value is so much better than having multiple properties in multiple areas, small properties in multiple areas. Usually the cost of managing small properties in multiple areas is a lot more expensive than a large property with multiple units. So the economies of scale is there. When it comes to income diversity, we pretty much try to diversify the income because also, since you have several units, there's multiple tenants, that allows you to count on different tenants to bring in that income to pay all the bills, services, and the debt on that property. Now, forced appreciation will come into improving the property through renovation, through capital expenditures, as well as lowering the net operating expenses of that property, adding simple things like fees for renting washers and dryers, pet fees, things of that nature. So that's forced appreciation is the work that's put into these properties in order to increase the net operating income. And also tax benefits. If you look at the IRS tax book, there's a lot of benefits that are heavily favored towards real estate. So pass-through depreciation is just one of those things that people benefit from investing in such real estate assets. We covered leverage earlier, and real estate is tangible. So you look at Bitcoin, you look at stocks, those are numbers on a computer screen. When you look at real estate, you could actually go visit the asset and it's not going to disappear or be stolen as easy as, say, a portfolio of Bitcoin. You lose your password, you can't access it. So there's a lot of variables there. Physical and measurable income producing assets. That's the benefit of physical commercial real estate. All right, that's next slide. Okay. Oh, didn't see that. Now, in regards to the benefits of the Boost Wealth Fund. As Philip stated earlier, it's a customizable fund. Pretty much an investor picks the deals they want within the fund, therefore create their own portfolio. Some people do not like investing in Miami, for example, or in Florida because one, there's a lot of hurricanes. Two, maybe they don't like alligators. And three, there's other different things to consider when investing in Florida. An investor can choose to invest in Texas, the Carolinas, but not invest in Florida. So that's what allows this fund, the customizable aspect of it, the investor can pick their favorable geographical areas. And if they just want to invest in Texas because they live in Texas, then they have that opportunity. It's not a blind fund where you just put money in it and it goes wherever we see fit. No, it's basically designed for the investor to decide what's best for them. Now, the one-stop shop. So the benefit of the one-stop shop is you have multiple deals in the fund and you get access to those multiple deals, but you only have to worry about one PPM and one K1. So as opposed to dealing with multiple deals where you have to look through all the PPMs, multiple sponsors, multiple deals, multiple K1s, and multiple portals. So there's a lot of things that are working against you if you're applying and joining different deals. This allows you to go into one portal and have everything access to anything that's within that deal. Now, diversification of the fund allows you to, like we said earlier, invest in different markets. So you can diversify yourself throughout the different markets based on what's available of deals within the fund. You can invest in a portfolio of multiple units, or you can invest in one market. That's up to the investor's preference, as well as deal selection. Deal selection allows you to pick your own deals, as stated earlier, therefore enforcing that customizable aspect for the investor, him or herself. You still get the tax benefits from pass-through depreciation and portfolio growth. As new deals are presented within the fund, those deals can be added to an investor's individual portfolio within that fund, therefore creating their level of comfort and diversification. Fund oversight, we still have to reply to the SEC regulations in regards to everything we do. We have to abide by the rules. So there is oversight for us. It's not a fly-by-night type of fund. We have to comply with every and all requirements based on the Securities and Exchange Commission. And as far as returns go, investors within the fund get returns before managers do. There is a difference within our fund compared to, say, a mutual fund where there is an immediate capital that's taken out of each investment before you get your returns. That's one of the benefits of the Boost Wealth Fund. Next slide. All right.
Chris, take a few slides, and then we'll share the bios later on.
You want me to pick this slide up?
Yeah. Let's have you present a little bit.
Sure, thanks. So thank you for sharing. So one of the things that's really critically important for us as a team is to make sure that we're partnering with the right people. And one of the things that you learn in this business is that you want to partner with people who you know and trust. But beyond knowing, liking, and trusting them, you have to make sure that they have a exceptional track record. And what that's one of the key things that we focus on. So as it comes down to vetting partnerships, we are looking for mature organizations that have at least 5 years of experience in this business, and beyond that, we prefer them to be vertically integrated. And what we mean by that is that they have a span of control within their organization to not just have acquisitions, but they also have property management within their span of control, construction within their span of control, and they're able to systematically execute the game plan that is laid out for each of the assets that are brought to our investors. We are looking for partners who have more than 1,000 units under management and have $100 million of assets under management or more. We also are looking for investors, we're looking for operators and sponsors who have gone full cycle in deals at least 4 times. And that's important because that tells us that they've seen different scenarios. They understand the different dynamics, different exit strategies that are important for them to be able to understand in each market cycle. And so that experience is invaluable. We also look for letters of recommendations and references from our partners. And then, of course, we have our own inputs that we provide, but they must have a demonstrated track record that lines up with our target criteria of what we want to deliver back to our investors. Next slide, please. In terms of deal flow is really critically important. You, from a fund perspective, in our case and in any fund's case, funds live and die by the opportunities that are brought to them. And as I mentioned, the partners that we are lined up with are really critically important. But how do we even make those relationships? How do we have access to this type of quality deal flow? It starts through some in-house prospecting. We are connected to communities of other fund managers and partners. We also are investors ourselves. And so through that, we know what good looks like and we know what good does not look like as well. And so through those experiences, those operators and sponsors who meet our criteria, we're able to source and partner with them and understand how they communicate. How do they stand by their word? Do they execute or meet and or exceed expectations as it relates to the projections that they're laying out? All of those things matter in terms of how we go about assessing different partners and operators that have come into our inner circle over the years of investing. And then equally as important to that, we are also tapped into mastermind communities. And those mastermind communities of other experienced investors and partners allow us to have access to great opportunities, to have dialogue around around opportunities and maybe not so great opportunities, ones that may not meet our standards, but may be the right deal for other folks. But we set the bar high, and this gives us an opportunity to really, as they say, get the cream from the top. Next slide, please. When it comes down to the vetting process, what hasn't been, what we want to really make sure that we drill down on in this slide in particular is really focusing on the market aspect of it. When you look at from a market perspective, Jeff hit this and Philippe did as well. We're looking to focus on places where they have strong job growth, strong population growth, and a high demand for housing. When we say that, we're saying we want to be able to know down to the zip code what the median household income is. What is that difference between the cost of owning a single family home versus the cost to rent a single family home or an apartment? And we want to understand what those dynamics look like, because that type of information allows us to understand really where it's more favorable for us to be investing and bringing investment opportunities to our partners so that they can really tap into those opportunities and understand that where they're placing their investment has a very strong opportunity to meet or exceed their expectations. Next slide, please. So we talked a little bit about this. I think we want to be able to, part of why we were coming today as a team is today we formally launched our team and our new partnership. And I'm so excited to be a part of a team with such experience and admirable teammates. What you guys should know before I go on is that Philippe and I'm a part of a mastermind community, and Philippe was the coach and that was assigned to me, and I had a chance to work with him, and it's been a tremendous opportunity over the past couple of years to be able to learn and grow with him. And through that mentor-mentee relationship, we've also had an opportunity to talk about how do we grow and scale businesses. And through those conversations, we've been able to now, Philippe and Jeff have had conversations about bringing on the right partner for them. And I'm just so excited and delighted to be a part of the team to be able to help contribute to the mission of being able to help our investors boost their capital. But Jeff, I see you taking yourself off of mute. You maybe have
Yeah.
some words.
Yeah, I just want to, take the opportunity to voice my feelings. I'm, excited to have you on board. We've been talking to Chris for a while. This partnership didn't happen overnight. It's actually been quite a bit of time of kind of talking it out and getting to know each other and getting on the same page because partnerships are almost like a marriage. We found that we have a lot in common. We understand that success is not a solo journey, and but a collective effort. So we also understand the importance of surrounding yourself with a team of like-minded individuals that share the same passion and vision. And I think that with what the conversations we've had with Chris, Philippe together collectively, we feel that we can amplify our impact collectively, uplift each other, and pretty much build a legacy and help our investors reach greater heights and provide a better solutions. And I just feel like it's a great opportunity for us to work together, and I'm happy to welcome Chris to the family.
Thank you.
Yeah, I just also want to take the opportunity to welcome Chris in this forum. Welcome Chris via this forum, share the information, share the news. We're very happy to bring him on board. I think it's remarkable that I think collectively, and you'll see we talk about this next page, we have experience in helping investors invest in 4,000 units. And we come, from diverse, different backgrounds. We have different type of work, the type of industry we've been involved in, between Chris in the life science industry, Jeff with his military background, working for government now. I used to work in business aviation for over 20 years. I think it's a rich diversity that all of us bring different point of views and different set of skills as well. I think we have a good balance amongst each other between operations, vetting process, and make sure that everything is going smoothly on the communications with investors. We're going to do great things together. Let me go to the next slide. So that's our collective, and I apologize, my slides keep moving. It's like this problem with a large screen. It's too big. So yeah, I was just saying we collectively have experience investing in more than 4,000 units. Now we want to distinguish, since we have this opportunity to go a little more in depth, but there are a number of deals that we did outside of the fund, obviously. But since we started our company with Jeff back in 2022, we brought 5. I'm thinking about this number 6. We're about to launch it tomorrow. That's why I was at number 6 in mind. But yeah, we've been pretty happy with all these. I think the sum of all our experiences and what we've done so far, it's all distilled to the boost deals, the vetting process for the different markets, the deals, the sponsors, as we spoke about that a few minutes ago. And like these deals that we brought to the fund, they're performing pretty well. So we're very satisfied with that, and we'll carry on doing that. And for these deals, they're a little bit recent. We don't have full cycle deals from that standpoint, but there are other deals that we have did a full cycle on, and to date, we're able to generate 2x equity multiple annualized, meaning that in any case, we have an average of 20% return per year held. And that represents, again, an average of 16% IRR. Next page, we just take 3 examples because just we want to share that's the reality. At the same time, it's deals that we did a little earlier when we started to do this. And here we have an example that did like extremely well, an example that did expected, and one that unfortunately there were a number of events and we ended up just returning the capital to the investors. I think that's the reality of this type of investments, and it's our goal to have a more stable set of deals that we share via our fund, right? So that was like pre-fund again. And so the first deal, we did extremely well. We did 4x for our investors, but we certainly exceeded at the best time. And that was very fortunate. From that standpoint, it was the peak of the market. I think it will come back to be a very hot, active market in the future. But right now, it bottomed out a little bit because of the interest rates, the market in general. So the first deal is 168 units, which was historically my second deal as a multifamily investor. The next one is 152 units in Atlanta, Georgia. This one, we stayed in that deal for a little bit above 2 years. And in that time frame, we were able to do 1.5 the initial investment. And I remember I had an investor who was displeased by the short time frame. But at the same time, when as manager of a deal like that, you need to have your finger on the pulse of the market. And if it's a good time to pull the trigger, then you should, because you never know what if it's a good opportunity now, is things could happen the day after. So you never know. And really, I think May 2021, it was not post COVID quite yet, but I think it was a good time frame to get out. The third deal is interesting. I'd say Montgomery, Alabama, in retrospect, not necessarily like the strongest market to begin with. Like definitely these days, it wouldn't pass our criteria of investment. And this particular deal ended up having a lot of issues, particularly a lot of the materials. And that's how it started, actually, that particular deal. We ordered all the materials for CapEx, and basically everything was stolen. So hundreds of thousands of dollars worth of equipment, or actually, materials were stolen, and the insurance found a loophole and didn't cover the expense. And then because of a weaker market, I think it was hard to ever come back to doing anything that made sense. And even though I think from the buying of the asset to the selling, there's quite an increase, but between the loss of because of these materials and interest rates and whatnot, that's how we ended up just returning the initial investments to investors. But again, just like three examples of full cycle deals. And I'll go to the next page. I think that's Jeff. You want to take this one? Talk about portfolio one. You're muted.
Okay, sorry about that. All right, so this is just a sample deal. This deal is actually a deal within the Boost Wealth Fund. It's a portfolio of 3 properties that we offered investors in what year was this? 2020, I believe. Either way, this was a deal that pretty much it's a sample deal. They're like I said, they're not all single deals. Some of them are portfolios that have multiple opportunities here. As you can see, it's well diversified throughout the Sun Belt area in great markets, pretty much. And markets shift, but overall, they're great markets. And we had targeted our benchmark returns that we like to see within the fund for our investors. So we opened this up to investors, and they had the opportunity to add this to their portfolio. It's still three years out for a full turn, but we're pleased with the team that we're working with. And yeah, so if there's any questions about that, this is just a sample deal within the Boost Wealth Fund.
And we do have room because one of the features of our fund is that we can pre-fund deals as managers. And in that case, we did pre-fund, Jeff and I, quite a bit of our own money. And we have the ability with our fund to resell our shares because we pre-funded as managers. So we have some room actually on this deal, actually, if I had some investors. And I think it's a perfect fit for any retirement funds because from a tax standpoint, the depreciation has passed already. Just a quick note there. Let's see. What else do we have? On details. Yeah, so I think we're coming to the end of the presentation here. Maybe I'll take the next few slides and then we can do some Q&A. So it's a offering, it's a 506c offering, meaning that it's open to accredited investors only. And yeah, it's just like some details here to read. This is the definition of accredited. And you also have a slide about our core values that we discussed at length: passion, integrity, accountability, teamwork, and professionalism. And what else do we have? Yeah, again, like some of the benchmarks we discussed and our contact information. Yes, we'll open for Q&A. Thank you, Paula, for being here, and Carl for joining us tonight. If anyone has a question, we'll be glad to answer.
All right. Thank you so much for stopping by. I hope this was informative. And again, we're excited to have Chris on board. We have a lot of plans, a lot of discussions, many things in the works. We have a deal that's coming on board that we should be sending information out starting tomorrow. Always feel free to reach out, ask questions, and you're going to start seeing more of Chris through our email campaigns. And he has a lot of things going on too. He has a lot of, yeah. So we're pretty excited. We're pretty excited and we're looking to make good progress and succeed together.
Very good. Thank you, guys.
All
All
right.
right. Thank you,
Thanks,
Paula.
Paula.
Thank you,
Thanks,
Carl.
Carl.
Bye-bye.
All right. Goodbye, y'all. Have another one right behind it. Woohoo.
All right.